So real estate agents are really familiar now with these solutions, these buy first solutions. And they know that this process is so much better than the traditional process that they're signing up left and right. One of our major competitors actually has 115,000 real estate agents working with them at this point in time. But because our competitors are working by changing the real estate purchase process, the realtors have to be involved in a different way. They often have to go through a certification process. The whole process has changed so much that they're now having to deal with the fact that that next home is going to be bought and sold twice. So they've got to be involved in that additional process. They've got to be involved in learning how to communicate the different benefits to the consumer. And they still have to be involved in the clearing, and they have a deadline on the first home. In our case, they still have to be able to communicate the benefits to the consumer, and they do have to realize that there's a timeline on when that first home has to sell to benefit their customer. That extra process, that extra certification, the extra work associated with buying and selling that next house in extra time, all of that goes away for the realtor in our world. For the realtor, this is just a new loan product that they get to deploy into the processes that they've used for years or decades that have worked for them. And they're going to save their customers a tremendous amount of time, in some instances, save their customers money, and in some cases, we'll end up with a dramatically less stressful process for both the realtor and the consumer. Any realtor that is wanting to put their consumers' interests first is very likely to become familiar with a buy first solution. And in fact, that's part of what we've seen is the bulk of these solutions originally started in property tech. They started really with real estate companies and property tech companies cropping up because realtors are close to the consumer through the process. So they're very familiar with the consumer pain points. What I think a lot of those realtors weren't expecting was that they were going to have to rethink the whole real estate process. And one of the drawbacks to this, one of the primary causes of the extra expense for consumers, of the extra certification and training and adjustments to the processes for realtors, is because they've been solved by changing the real estate home purchase process. And what makes us very different is we looked at it and said, well, I get why the traditional loan process has broken the home purchase process and why the home purchase process is being changed to deal with these pain points. But what's the old saying? If all you've got's a hammer, everything looks like a nail. Because this was coming out of the real estate space, the process was solved by buying and selling houses in extra time. And our approach was really to look at it and say, look, real estate agents don't need to change the processes that have worked. They've just been fed a broken loan product. Let's go fix the loan product. And that's effectively what the trade-in mortgage does. We fix the loan product, and by changing the product, you can avoid changing the process as much. A couple of big things. One, it's better for your consumer. It's going to save them a lot of money. Two, it's easier for you as the real estate agent because we're not asking you to go through and get certified or change your process. We're just asking you to pay attention to the timeline involved and make sure you're changing your pricing to keep your client's best interests in heart. Three, we're really focused on making sure that you can keep the relationships that you've worked with for a long time. So if you've had 3 or 4 or 5 lenders that you've worked with over the years and you've built a good relationship with them, our product can work with any of those lenders. All they have to do is say, yes, we want to work with Calc. We set up the product for that lender and you're good to go at that point. And so you don't have to go out and build new relationships. You don't have to change your process, and you can save your customers a lot of money and create a lot of convenience. Doesn't cost the realtor a thing. The realtor is likely to end up, by virtue of being able to offer this solution, the realtor now has something they can advertise that's different, that they can use to make a consumer or a client's experience a lot better. And so we enable the realtor to work with lenders that they already know and trust, to bring a better mortgage product that enables the real estate process to work the way that the realtor would want the real estate process to work for the consumer from the beginning. And the realtor doesn't pay us anything. So compared to the traditional process, the consumer is going to end up paying 1% for the purchase price guarantee, which is our guarantee that we'll buy the house from them if it doesn't sell. If that's a $400,000 purchase price guarantee, it's a $4,000 fee. If it's $300,000, it's a $3,000 fee. They're going to pay us a $2,000 convenience fee. And then, based on the value of the next home, if they're going to buy a $500,000 house, they're actually going to pay 0.5% of that fee to the lender who's extending that second lien. So it might be $2,500 for a $500,000 home. And then for us, it's $4,000 for the purchase price guarantee, and it's $2,000 fee. So you're looking at $2,500, $6,000. You're talking about $8,500 to move from a $400K house to a $500K house. Now, leaving aside the tremendous amount of heartburn, heartache, grief, time, all of that's already going to be saved for the consumer, when you compare that cost to a traditional process, there are a couple of really important things to note. One is, in today's market, you're a lot more likely to get that next house, which is worth way more than $8,500 to the client. In a more normal market, you might save 2, 3, or 4% on that next house. So if you can negotiate a 2% discount on the next house by virtue of bringing a non-contingent offer, your client has already saved $1,500. Even if that weren't the case, in a case where the client might not have had a big enough down payment to make a 20% down payment on the next house, and they would have had to pay private mortgage insurance, the typical amount that they would have had to pay in private mortgage insurance on that next house over the course of 6 or 7 years might be $14,000. So now your client's saving $14,000 on PMI. They're saving $10,000 by virtue of you being armed to negotiate more aggressively on their behalf. So now this $24,000 is getting compared to an $8,500 fee. And the consumer might save $16,000 and get all of the convenience benefits that we've discussed.